Hey guys, this is Russ Horn. We're taking a look at a couple of currency pairs that we looked at last week. It's Monday, March 30th, and last week we took a look at the Australian dollar, US dollar, and the pound, US dollar. Now, the market has played out exactly the way we figured it would. The Australian dollar, US dollar dropped like we figured it would, and now it's a point of reassessment now. What's going to happen now? And that's a great question. We've got these different levels. This is the daily time frame. If you remember from last week, we were looking at this level of support, resistance actually. Price bounced off it. We had a rejection spike. Price dropped to this level is what we were targeting essentially. We wanted to see how far it was going to move to the end of the week. And it was this 200 SMA, and we got right to it. We dropped just a little bit below it. You can see where the gap was, where the market closed. So we got right on the money with that, and then we had these other levels which the market had opened and just continued to follow through, essentially. So now we want to know what's going to happen next. And we've got the daily time frame, we've got the 4-hour time frame. Let's take a look at the pound real quick. The pound is stalled. Again, this is like we thought we would because of this no zone. Remember, we were talking about how the price gets into this formation, and I'd like to see that the last third is essentially open. When price gets into that last third, it could just stumble out of the end and just kind of move sideways. And it's done that. It stumbled out through the end and moved sideways, but this pattern is a continuation pattern to the short side. We've got the market moving down, and it stalled, and it got narrower and narrower, but it moved itself into that no zone, into that little tight end in there, and then just kept moving sideways. But it has started to move in the direction we ultimately thought it would. This is still the target for that. That's the 1.46642 level. It's not quite the bottom, not quite support, just a little bit above. If I look at on the daily time frame, this still is in play here. We've got the move back up, back down again, and then we are bouncing off the 21. So we do have that move down. Now, what I'd like to see for this particular pair, this is easier to kind of flow with this one because it hasn't finished any moves yet. What I'd like to see is that the market continues to move down. Right, what we've got is a low followed by a lower low, and it's happening clear across the board. MACD histogram, MACD line, stochastic, low followed by a lower low. So price is doing what the indicators are doing, or vice versa. You know, the indicators are doing what the price is doing. And I don't want that. If I'm going to see that the price reverses or climbs, I want to see that divergence in these indicators. And I don't have that right now. So what I'm going to say is I'm looking for a continuation to the downside here. I want to see that the market keeps dropping. We are bouncing off the 21, and I'd like to see that price gets into about this. It can be a little bit less, could be a little bit more, but this would be about that area. I would like to see price get into here. And what that is going to do for me is that we get this lower low on the price. Price gets lower than this previous low, but on the indicators, we don't see that. We see the indicators making higher lows. We don't get the stochastic as low as its previous low. We don't get the MACD as low as its previous low. We don't get the MACD histogram as low as its previous low. However, the price does. It gets lower. At this point, I'm really excited about looking for a long opportunity. I want to see the market go up. So over the course of this week, I would like to see that the pound, US dollar, keeps dropping. I'd like to see that it drops a little bit further so that we get that setup to the long side. Now, how would we approach that long side? Well, we're going to be drawing some kind of a trend line, and then what I'd like is for the price to cross above that trend line. So price is going to drop below and then move to the upside. Now, we may redraw this trend line depending how this forms over the next couple of days. We want to play this by ear. So if you're looking for a short opportunity, that would also be good because I do expect that the market will continue to drop. So looking for some kind of shorting opportunity would be a great play. I think that we do have that possibility that we're going to reach down into 1.45246 level. I think the market's going to get towards there. Again, this becomes a nice target, this level of support. But ultimately, I think we're going to break that. We're going to get lower than that because on the daily time frame, I'm looking for that divergence setup. All right, so that's what my outlook on the pound US dollar is. Now, if we go back to the Australian dollar, US dollar. So what I'm seeing here on the daily time frame is we've got this divergent move here. I'm just going to draw a line on there. So we've got this lower low on the price. So we've got this lower low on the price. We've got this higher low on all of the indicators, all of them. Histogram, line, stochastic. And we had that move up to the 55. Now this is normal. Like when we get that divergence, it will, that's ultimately what we're going for, is this 55 level. And it is bounced off of that and is on the way down. Now again, this is the daily time frame. So what I'd like to see is what I'm seeing on the MACD especially, not so much the stochastic. It looks like it's going to play out that way, but I like what I'm seeing here is this triple divergence. They call it triple divergence. It forms 1, 2, 3, but it's really 2 divergent moves. So I'm also thinking that I'd like to see the Australian dollar, US dollar drop a little bit further. I'd like to see it drop further than its previous swing low and then make the move up. Now this might chop a little bit. I don't think it's going to go just straight down. What I'm thinking is we might get a move up before we get that big push down. And I'd ideally like to see that because that's going to give me a high and then a second high in which I can use to draw my trend line. So this is what I'm kind of looking for here, is I want to see a continuation to the downside. This would be a play that I could trade. This would be something that I'd be comfortable to trade. You want to make sure, though, that you are aware of support and resistance levels. This is an important level right here. We've got this level, if I zoom in a bit, we've got this low, low, a low, and we're kind of at that level right now. We are at these previous levels over here. We're there. I don't know if we're stuck yet. No, we're not stuck. We're not bouncing off of those levels just yet. We might see that this little bull candle might start kind of a pause in here. And that is going to be perfectly fine. We could see that price rises a bit, maybe to the 21. As the 21 pulls itself down, we could see that price gets up to that 21 and then moves back down again. That is very possible. If I'm looking for the day, though, I'm looking kind of in an overview here. What I'd like to see is that ultimately, even amongst those pullbacks, that we do get a smaller drop, or a lower drop. What I'd like to see is price moves kind of in this range here. I want to see that price gets to about 0.7498-ish, give or take a little bit. That is going to cause that triple divergence that I like so much. That triple divergence is an awesome signal that price is going to reverse. Divergence, regular divergence is a great indicator, and price does generally move, and it did. It moved here. If you were trading the 15-minute, massive moves, massive. But the 1 day and the 4 hour, they're going to be a little bit smaller, but they're moves. The market moved, but I do want to see it come back down again. Now let's take a look at maybe something different. We'll just pick one here. What's the Euro USD? What's this one doing? All right, what we've got is the price. The 21 has crossed above the 55, and doing that, price does 10-1 a gun for the 200, and it did that. It tagged just exactly the 200 and then dropped back down. And right now, once it tags the 200, it is free to do whatever it's going to do. The 21 is in between the 55 and the 200, so we could see that price just bounces back up and back down and back up and back down until it decides to make a change in some kind of direction. There's no trend at the moment on the 4 hour. The trend, the long-term trend, the 55 and the 200 is down, but the medium term and the shorter term trend, they're kind of all over the place. Let's take a look at the daily. What we have is a long-term trend intact. We've got the 21 under the 55, under the 200. That trend is down. It has been down for a while, but never use that as a reason to go in the opposite direction. So we've got lower lows being played out and we've got that lower low essentially on the histogram and on the stochastic. We've got that stochastic bottoming right out in a couple of places here. Once you get that bottom, it can't go any further. It can't get any lower. The MACD line itself is so far away from its zero level that any divergence at this point, you've got to be cautious with it. And it's virtually not divergent anyways. So that leads me to think we're going to see something similar to what we were looking at the pound and the Aussie. We want to see that price drops down and then creates a double bottom, maybe a little bit higher than the double bottom. It could happen, or lower than the double bottom. But I want to see it get kind of around that level. I want to see price get to around this level here, this 1.05 level. Once we get that, then I'll be looking for that disagreement between the price and the indicators. If price can get down to here and the indicators cannot, they cannot equate, they cannot equal that previous bottom, then we've got that divergence that I'm looking for a long trade. So right now I'm bearish, kind of clear across the board. I want to see price drop. Again, I got to say this a million times, that this isn't written in stone, but this is probably, it has the biggest likelihood of being the case. Most of the time when we say this, we're right on the money. Sometimes we're not. Right? That's the essence of trading. I mean, that's how the market works. What is likely to happen is the market is going to drop, going to create a double bottom or a little bit lower. That's what I'd like to see the most, is that we get a little bit lower than this previous low. And then from there, I'd be looking for an opportunity to trade long if the signals are there for that. And then if we trade long, it won't be a huge long trade. It'll be up into the 21 or the 55, depending where that signal to go long will be. But right now, the ultimate trend is just down. So for the course of this week, I'm looking for the euro, I'm looking for the pound, I'm looking for the Aussie, all to drop. I want them all to fall, to get lower than they have been. This is essentially the very basic market analysis. You've got trend, you want to discover a trend, and then you've got counter trend tools. So these counter trend tools, the ones that I use, are the divergence counter trend tools, just regular divergence. You know, we're not looking at hidden divergence. Hidden divergence is trend following in nature. So if you've got hidden divergence plus moving averages, then you've got two of the same thing essentially. We've got that hidden divergence here if that's something you want to look at. I know traders will be interested in it. So we've got a high followed by a lower high. And then the indicators, wherever you pick it from, you've got a high followed by a higher high. Not so much on the MACD line, but it is present on the MACD histogram. So you have a high followed by a lower high on the price and a high followed by a higher high on the indicators. This is slingshot or slingshot or hidden divergence. What this suggests is that the market is loading up. It's loading up its momentum to continue that move to the downside. Now, even if we didn't have that, all of the moving averages are telling me that we are still down. We've got, everything is down, and there's no reason to trade up just yet. All right, so if I look at this on the 4 hour, I am thinking that once we get this 21 to drop below the 55, we will get a resumption of that trend. And I'm going to show you an example of that all in here. We have that 21 gets above the 55 and comes down and finally dropped. Here it attempted that, dropped and went sideways, rose just a little bit, not very far, and then finally plummeted. And we ideally are going to see that again. Price may come down, move back up towards the 55, bounce off of that, and then come back down. It's not going to be a straight shot. It's not just going to do what this line does. It's going to kind of bounce around a little bit. And looking at it at a 1 hour or a 15-minute time frame, we might be looking at something that is tradable to the upside too. But overall, the 4 hour and the daily, I'd like to see that the market drops down. All right, guys, my name is Russ Horn, and I will see you in a different video down the road. Bye-bye.